So the objective of this module is to understand who are the stakeholders as far as credit bureaus go. We will start with understanding a little bit about what is a credit bureau. We'll then move on to understanding who or what typically is a stakeholder. We will then look at the stakeholders in the credit bureaus itself, the role of the stakeholder, and the responsibilities of the stakeholder. So let's look at what are credit bureaus. Typically, credit bureaus are organizations. They are constituted normally under the Companies Act of India, for example, and they collect, dedupe, and collate data on borrowings and information that they have received from various lenders. The ownership of credit bureaus globally ranges from government-sponsored to private equity all the way to banks and lenders. In India, the credit bureau ownership is divided into two components. One, the technical partner. Typically, for example, you have TransUnion, you have Equifax, you have Experience, and you have CRIF. And the remaining shareholding is owned by banks, private equity, and other interested stakeholders. Ownership is also governed by the foreign direct investment rules that the government has promulgated. So, for example, when the bureau industry started in India, the maximum foreign ownership allowed was 20%. Today, it has gone up and is now 100%. Do all the bureaus have 100% foreign ownership? No, they don't. They've been creeping upwards, the foreign ownership, to reach 75, 80, and now even 90 and 95%. What these bureaus do is they take data from the lenders, data which the lenders are required to provide under law, and these data is then deduped and put into the system of the bureaus to be enabled to be produced as a report for you as a lender when you want a report either on an individual or on a company. One important aspect to remember is that all bureaus globally work on the principle of reciprocity. What that means is you give data to the bureau and you're allowed to use bureau data for your credit decisioning. You as a lender probably are using one of the 4 bureaus in India for taking your credit decisions. Now, there are exceptions to this principle of reciprocity, which we are going to talk about very soon in this module itself. But in principle, this reciprocity is mandated by the very definition of the way bureaus work. If you don't give them data, they don't have anything to give back to you. The second aspect of this module is what is a stakeholder. A stakeholder, by its traditional or conventional definition, is any individual, any company, any organization, any regulator who has an interest in the particular project. The stakeholders of the credit bureau industry, I would categorize them into 4 stakeholders. The first is the credit bureau itself. The second stakeholder we will talk about is the Reserve Bank of India. The third stakeholder is the lenders, the credit providers, and I would divide them into 2 subcategories. The first is credit institutions and the second is specified users. And the fourth, but probably the most key, which affects you and me as individuals, is the borrower. The borrower being either an individual who takes a housing loan, a credit card, a car loan, an education loan, or a company being a non-individual. So this nexus between the 4 stakeholders is a very important and a very crucial component of the smooth running of the credit bureau industry in India. So let's take the first stakeholder, the credit information companies. As I said, there are 4 credit information companies in India, and what they do is they collect data under a law that they are governed by. That law is called the Credit Information Companies Regulation Act of 2005. That law lays down very clearly what they can do and what they cannot do as a business model. The credit information bureaus have certain responsibilities. A typical responsibility of that primarily is to follow the law that I just mentioned. In addition, they have the obligation of maintaining privacy and maintaining confidentiality, along with ensuring that the data is protected from unauthorized access. They do this through legal agreements with the lenders and, of course, through technological intervention. Now, The second stakeholder that we are going to talk about is the central bank of the country, which is the Reserve Bank of India. The Reserve Bank of India is an extremely important stakeholder because they have the double role of not only regulating the lenders who use credit bureaus and therefore ensuring that the lenders do not misuse the data that is received by them, but they are also the regulator for the 4 credit bureaus that we have. And because of that, there is a very clear synergy between regulating the data provider, the data user, and the data storer. The Reserve Bank of India, of course, has many multiple roles to play. It has many acts that it looks after. It addresses a series of acts through the regulatory intervention, and one of them is the Credit Information Companies Regulation Act 2005, which governs the way credit bureaus can work. The third important stakeholder in this entire setup or in this entire industry are credit providers. Providers of credit, anybody who is giving credit. And I've divided this into 2 sections. One is the credit institutions and the other is the specified user. These 2 definitions are very clearly laid out in the Act itself. And a credit institution is essentially a data provider. The credit institution is governed by the Reserve Bank of India, is licensed by the Reserve Bank of India, and includes banks, NBFCs, housing finance companies, regional cooperative banks, foreign banks, and any entity that comes under the Reserve Bank of India's supervision. They, by mandate, they by law, are required to provide their data on a regular periodic basis to all the 4 bureaus. Now, I talked about the principle of reciprocity, and therefore these credit institutions by definition are allowed to access reports and other products offered by the 4 bureaus. However, in India, we have created another category of credit providers called specified users. These specified users include all the credit institutions which we just spoke about, who by law are required to follow the principle of reciprocity. And then there are some other categories which the Reserve Bank of India can specify from time to time. Examples of that: insurance companies, telecom companies, utility companies. As we all know, these 3 categories are governed by different laws. For example, the telecom industry is governed by TRAI, the Telephone Regulatory Authority of India. The insurance industry is regulated by IRDA, and therefore the RBI or the central bank does not have regulatory authority to insist that these entities or those entities under these respective domains are mandated to share data with the bureaus. However, recognizing that giving data back to these entities who are providing some form of credit, either by way of an insurance policy payment, either by way of settling an insurance claim, or by providing post-paid telephone services, they are also extending credit to the consumers. Therefore, they are classified as specified users in addition to the credit institutions. The difference being that the principle of reciprocity does not apply to them. They are not required and cannot be mandated at the moment to share data with the bureaus, but they are allowed to access reports and other services provided by the bureaus. So, credit institutions and specified users form the third leg of the 4 stakeholders in the credit bureau industry. The fourth, and perhaps the most important as far as you and I are concerned, the fourth stakeholder is the consumer. And the consumer doesn't mean only individuals. Like I said earlier in this module, we include all the private limited companies, public limited companies, anyone who borrows from the formal industry. Now, the consumer is most important because ultimately he is taking the credit and his data is going into the bureaus. So obviously the first important responsibility of the consumer is to make sure that he services the loan on time. Because when he applies for a loan elsewhere, it is his credit history, it is his repayment record that is going to be available to that new lender and will help in deciding whether you get credit, and if so, on what terms. Better terms or tougher terms, depending on your credit history, your credit score, your credit report. The consumer has a responsibility also to provide data accurately to the lending institution. to provide complete data. So when you're filling out a loan application form, you must make sure you get your name right, your identity number like your PAN card or your Aadhaar card or whatever right. If for any reason there is a change in your personal data, you need to go back as an individual or as a company to the lender from whom you took the loan and inform them of the change, so that the lender can go back to the bureau and say that Mr. X is now Mr. Y or Miss Y is now Miss Z, or your address has changed, or any other data on your personal demographics that have been either missed out earlier or have changed now. It is your responsibility to go back and tell the lender. Also, please remember, the bureau doesn't change data, because the bureau's job is only to put data together, to collect it, collate it, and give it back as a report or a score. Data originates from the lender through your application, and it is important that you understand that when there is something wrong with your data, you need to go back to the lending institution to get that data changed. This is one part of the module that we want to talk about with regard to the 4 stakeholders. Part 2 of this module is going to talk about the law that governs credit information bureaus, what is called the Credit Information Company Regulations Act 2005.